Good afternoon, everyone. Today is the 21st of May. Today is a Thursday as well, 4 7 p.m. And I want to be talking about, and the year is actually 2026 as well. So I want to be talking about macro thesis. And these are some of the things I look out for when I'm like doing my analysis as a trader and, when I want to execute. And this presentation will be one of many of other many presentations I'll be doing. So today, I want you guys to understand something, right? And the first thing first you have to understand is that trading is not a game. And also, you also have to understand the fact that trading has real life consequences. Everything you see on price on the market, or like when you look at an asset price, when you look at the stock markets, when you look at maybe the currency market, when you look at the gold and silver markets, one of the things that you have to understand is the fact that these things that we are seeing, these numbers that we are seeing, they are reflections of what is happening in real life. So when we make trading decisions, we just don't make trading decisions based off of what you can see on the chart, because it is what you can see on the chart that actually affects what you end up seeing on the chart, and that's the real truth. And one thing that I've realized is that a lot of us has been schooled to water down the effects of understanding the real core concepts that actually move prices, the real core concepts that actually changes the game for you as a trader or as a person. Because if you don't understand the economic situation or the economic condition of a specific country, how then do you how then will you be able to make advanced advanced gamble. Let me use the word gamble, because at the end of the day, trading is gambling with an edge. So how would you be able to make advanced predictions on a currency or on a stock or on an indices, when in the real sense of things, you don't really even understand what is happening in the lowest form of or how will I say it? You don't really understand what is happening in the background. And you have to understand again that every position taken carries real financial consequences. So we have to discover the structural, the macro, and the tactical filters that we can check prior to deployment in indices, global equities, or gold markets, and silver, of course. So the first thing I'll be talking about is what I call the macro regime. And it is basically like aligning yourself with the decision of the Fed, Federal Reserve. So we have to understand that global valuations collapse not because companies stop producing, but because the cost of capital actually changes. So this basically means is that the interest rates affects a large number of things. All right. Interest rate is what determines whether people are putting their money in global equities, whether people are putting their money in non-yield assets like gold and silver, and global equities, I mean stocks, indices, US100, S&P 500, US 30, and some stuff like that. All right. So that is one thing you have to understand. And that is one of the fundamental principles of one of the fundamental rules that actually guides, that actually propel prices, that actually causes a drastic change in the way the price we see is being reflected to us. All right. I will still be talking about how companies are being valued based on interest rates in subsequent videos, right? So the second thing I'll be talking about is price structure. So one of the major goals that I'm trying to just establish with this very first video is just for you to have an idea of how the global financial world actually operates in a kind of like a deeper level beyond the charts. Yeah, that is why the name of the channel is the macro trading thesis, beyond the chart. So we want to see things beyond the chart. And when we're able to see things beyond the chart, then we can now reflect those things right on price, and we'll be able to understand. That would help us to be able to hold our trades for longer periods. That would help us to know when people are calling change of directions, and we know that no, price is still bearish, price is still bullish based on our information. So one of the price structure that I basically use is I use the 21-day EMA, I use the 50-day SMA, and I use the 200-day SMA as well. All of these are just normal technical indicators for identifying whether price is in a bullish structure or bearish structure. So the 21-day moving exponential moving average is actually a short-term momentum tracker. In an LD institutional trend, key technical pullbacks are frequently contained by this exponential moving average. The entire 2024 gold run respected this metric as structural support, and I'll be showing you some of those things as this presentation is going. I might just like still come back and talk about it. So also the 50-day simple moving average, this represents the medium-term market participant trend. This moving average identifies secondary pullbacks and serves as an optimal accumulation zone for core high conviction position within ongoing bull cycles. All right. Remember, the 21-day EMA is a short-term momentum tracker, whereas the 50 SMA is a medium-term market participant trend. You tend to see the market from a medium-term perspective. And the 200-day simple moving average, the institutional dividing line between bull and bear regimes. So when the US100 reclaimed its 200 SMA in January 2023 at 11,000, it signaled the macro bear cycle had concluded, right? Laying the groundwork for a massive 17,000 run. I'll still be showing you these things as time goes on. So the third thing I'll be talking about is volume and open interest. So basically, we have breakouts occurring in team volumes as structural traps. And I'll still also be talking about some of these things in depth, like I've mentioned earlier. So let's say we have a 1.5x volume rule. Okay, we have a 1.5x volume rule, which confirming genuine breakouts requires a minimum volume expansion of at least 150% above the average baseline to validate institutional commitment. So the idea is that we just don't want to see short-term breakout structures to confirm long-term trends. What we want to see is we want to see things from a bigger perspective, maybe like the daily, like the weekly, like the daily and the weekly. We want to see actual price changes in the directions that we are looking at. Not just because you see a breakout structure on M15 or H1 and you're like, oh no, price has changed, and then the next 3 weeks or the next 2 weeks or the next 3 months or the next 6 months is going to be bullish or bearish based off of what you're just seeing on the H1 time frame. Price does not work like that. Also, we have futures open interest. We want the net total of active contracts. Rising price accompanied by expanding OI suggests LD sustainable accumulation of fresh long positions. Also, we'll talk about short covering warnings. Rising price paired with dropping open interest indicates standard short covering, a structural weak foundation liable to collapse. All right. And historical case, gold breakout above the 2,400 in mid-2024 saw deep volume expansion and OI surges, propelling it to an additional $300 rally. And also, like I said, these are some of the things that I'll still be talking about in depth, because this is just like a video to just like brush things through. So we want to talk about momentum and rotation as well. And momentum and rotation is basically trying to understand which of these asset classes or which of these stocks is actually driving the market, especially when you look at the indexes like the S&P 500, the US100, the S30. Basically, you want to understand that for every time there's a stock market rally, there's always sector drivers, right? It could be growth stocks, it could be tech stocks, it could be stocks that are related to war, it could be stocks that are related to real estate. But the most important point is that you would every single time there is a bull run, you definitely see that there will always be a leading sector. So when we are talking about the global and the structural breadth, the true direction execution does not require buying highly extended oscillators, right? It demands checking that momentum is structurally supported in key macro timelines. So for this, we usually just use the weekly RSI 50 filter, right? An asset with a weekly relative strength index above 50 tells us that buying dominance remains structurally active. And also, equity growth outperformance in global indices. Track the ratio of growth equities US100 versus broader system XPX to confirm active risk on regimes. Again, all of these things will still be talked about in-depthly. Also, precious metal correlations. Precious metals require specific verification across the commodity complex to ensure structural participation is clean and broad-based. Silver to go to silver ratio. Silver structurally leads high conviction gold campaigns. When silver begins outperforming gold on a relative basis, broad capital allocation is confirmed. That is one thing you should know. And also capital flow validation. Relative outperformance in silver signals real commodity market health, proving that moves are structurally sound. So when there are situations where which silver is consistently outperforming gold, you should understand at that point that real money and real institutional liquidity is actually flowing into these assets. And the fifth thing that I'll be talking about is catalyst and event risk. So, exploiting micro panic catalyst. Every sustained price leg is driven by fundamental structural narrative. When extreme retail fear collides with a favorable monetary bias, highly asymmetric execution windows open. In August 2024, the VIX spiked violently to 65 amidst a 10% pullback. However, underlying economic conditions pointed directly to a major imminent Fed cuts Fed rate cut cycle. Smart money accumulated panic, resulting in a full index recovery within 4 weeks. So this is like let me just give you an example. Just about around February, March 2026, you could see the US100, the S30, S&P 500 was just like on a downtrend and it was going down for a long time. And at that time, the VIX, CBOE VIX was already above I think it was above 30. Yeah, it was above 30 at that point, at that particular point in time. And we were seeing a lot of people calling the bottom, not calling the bottom, but we are seeing a lot of people saying, oh, the stock market is crashing. Oh, I need to take out all of my assets from the markets and stuff like that. And the truth is actually that when fear is being accumulated in the market, what usually happens is the opposite. Just like there was it was around August, I think it was, sorry, March 38th going to April, March 30th, 31st going to April 1st of 2026, we had Trump tweeted something about the fact that, oh, an entire civilization is actually going to get wiped off and stuff like that. That sent a lot of panic for some people. That tweet alone made a lot of people think, oh no, the market is going to collapse and all of those things. But those are catalysts that actually like enabled price or the market to rally. And price has been down for like months and it was able to recover a lot of those moves in just about 3 weeks or something like that. So my point is that we have to understand, for us to be able to understand macro side of things, we need to be able to think the way most people are not thinking. We need to be able to see things from perspective that a lot of people are not seeing it, right? So, what is our tactical execution checklist? Number one, macro regime validation. First question is the Federal Reserve pausing on actively cutting rates? Is the dollar weakness aligning to provide systemic tailwinds? Number two, price structure audits. Is price trading clearly above both the 50 simple moving average and the 200 simple moving average? Are daily chart exhibiting series of higher highs and higher lows? Number three, institutional volume audits. Did the price breakout register over 1.5x average trading volume? This is very, very important when we talk about stocks, which we'll still be talking about later as time goes on. Also, we want to understand, is the future open interest expanding alongside price? And the fourth thing is intermarket momentum. Is the weekly RSI OD above 50? Are risk on leaders outperforming safety-oriented sectors, right? So The core asset mandate. Protecting capital when conditions are wrong is as vital as sizing up when they align. If any structural check fails or binary risk are looming, wait, go beyond standard retail charting and execute like an institution. So that is the end of the presentation. So in later videos, I'll be going in depth into some of these things and even deeper than I have covered today. And if you have any questions, you can drop it in the comment sections. I will look at it. Have a wonderful day, and I will see you in the next one.